Hey everyone, welcome to our latest TDR Small Cap Sunday podcast. Thanks for checking in here on a Sunday night. I am your host, Shad Dales. Good to have you here. 5 new companies to dive into tonight, including a specialty hearing company, a lithium company, one company that's the jack of all trades, seems to be changing, seems like every single month, and also not one, but two cannabis companies. So let's jump into tonight's podcast to welcome in lead financial writer and analyst of TDR, Bill McNarland. How are you, sir?
Doing well. Had a nice weekend in Mexican wine country, so it was nice to enjoy the
What a
the
life.
beauty. Yeah,
How's that, my friend?
well, it's great. Just about an hour south of San Diego. There's 150 wineries, amazing restaurants. It's near the beach. It's just an unknown Napa Valley by the ocean.
Really? You ever get a
Yeah,
chance to go to San Diego in addition to Mexico that much or
yeah, yeah,
not
yeah,
really?
for sure. Oh, I'm there every month, typically on my way through, and we do some shopping there and such. Yeah.
That could be the greatest city, place to live in America, San Diego. I think they get about 5 days of rain throughout the entire year, but what a place.
Yeah, it's
That's
a
for
wonderful
sure.
climate.
All right. As I said off the top, 5 new companies that we're going to basically highlight tonight, including, as I said, a lithium company, specialty hearing company, a crypto miner, a tech company, and finally a micro cap cannabis tech company as well. So let's jump into it. But before we do, all views on the TDR Small Cap podcast, the guests on this podcast are purely opinion. You should not treat any opinions by us or guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. All right, let's begin with our first company. They're based out of Los Angeles. Company's called AXIL Brands, which trades on the New York Stock Exchange under the ticker symbol AXIL. Current share price $7.42. Market cap is $42 million. Shares outstanding very tight, 5.7 million, and daily trading volume is around 100,000. So first up, Bill, tell us more about this company and why it's grabbed your attention.
I was excited. We had a viewer reach out to me, a very experienced individual in the capital markets, and told me this is a company you have to look at. It's one of the
Yep.
best companies he came across in his career. So I went to go do some looking into it. And sure enough, this was a very interesting company. And so they are in the specialty hearing protection business. I didn't
Okay.
really understand what that was, but we have a chart here we can, or a picture here, we can show the type of business that they're in. And so the idea is that they combine hearing protection with high technology so that you can wear something like an AirPod and you can
Yep.
have sound and different things, but also protect your ears when you're doing something like using a chainsaw or driving a motorcycle without any mufflers on it.
So it serves multiple purposes because, like, when I hear, no pun intended, about a hearing technology company, I think of it being as like old school. However, the company in this particular case is not the case when reviewing their website. So, what did you find? Like, what was the user experience like? Some of the things that you learned when visiting their site?
I went on, and why not? Would I not buy a highly reviewed pair of hearing protection devices that are just as good as having a pair of AirPods? And so, whatever you're doing when you're at risk, so if you're working all day long doing some type of physical labor, why wouldn't you want to have music or the ability when someone's calling you to pick up the phone and stop what you're doing? And the interesting thing is the price point, and we'll find out more with in their earnings. But the price point was similar to buying a pair of AirPods, yet you had this added value of the hearing protection. I thought it was just an amazing idea.
So Bluetooth connected. So when we're often referring to companies like this, partnerships are what is key to really building brand awareness and really, I think, solidifying who the company is and how credible it is. So who are they currently working with?
This year they had a lot of news, and so they have a 5-year sponsorship agreement with USA Shooting. That's the organization that represents the individuals that go to the Olympics on behalf of the United States. They also got a distribution agreement with Kinsey Outdoors. They're in all 50 U.S. states. They're an outdoor retailer and wholesaler as
Oh,
well.
okay.
But also they got an agreement with Racing Electronics. They're the group that sells merchandise at NASCAR events. So Axel actually has branded NASCAR products, and that makes sense. You need
That's
hearing
huge.
protection. Yeah. And so that was a very exciting news. And on top of that, this year they got listed on the New York Stock Exchange. They got uplisted as well. So a lot of things are going right with this company this year.
All right, let's look further into these charts. Current market cap, as I said, was 42 million. What was the revenue over the last 12 months along with growth during that same time period?
Yeah, so we'll put up the income statement chart here. We got revenue of $27.8 million, but it's the growth that was just unbelievable. In the last 12 months, they have 62% annual growth, 185% CAGR over 3 years, and 90% CAGR over 5 years. So this company has just been flying. But it was the
Over
growth
60% growth in 1 year.
1 year and then 90% a year over five. Like they just been flying. But it was the gross margin that really took me back. They have 74% gross margin when they sell one of
Wow.
these products. So they can get the price point because people see it's a great idea, but yet they've figured out how to get a lot of margin and be able to put out a quality product. So I was really impressed with this.
All right. So on the net, or I should say New York Stock Exchange, AXIL. What else did you see? What'd you learn as far
You
as
know,
EBITDA again?
Yeah, so EBITDA was 2 million, and so they last year in the last 12 months they have spending on SG&A, and we know that to build a brand, to hire employees, to do things, but their SG&A spending was 67%. But having such a high gross margin makes up for it, so it's coming down to the bottom line of EBITDA. And so for cash flow, we see on the next chart here, they had leverage free cash flow of almost $1 million. But what was so interesting is they have very tight R&D and capex spending. So this is a
Hmm.
high
Yeah.
margin business without a lot of, it's not capital intensive. They figured out how to run a very fast growing yet profitable business.
So clearly the product works, especially if you're partnered up with companies like NASCAR. That's massive. What'd you find as far as their credit score?
Yeah, their credit score was amazing. We go back to this balance sheet chart here. Their credit score was 10.5, and that's because they have 6.7% or 6.7 million of working capital, and they only have 37% liabilities compared to assets. So they're a very conservatively structured company. So it's rare to see fast growth, high margins, limited spending on SG&A, not capital intensive and good credit. It's a very unusual combination of a business.
Where does this company rank as far as when we launch this podcast with regards to all the companies that you've done research on? Is this one of your more favorites?
Yeah, this is a very exciting story. But then again, you see that the market cap is only $42 million. So
Yeah.
one, it blows out of the water the theory that all micro caps are risky. But the second thing is the reason people just don't know about this. It needs more exposure for people because if people understood this story, they would be interested. So I think with an uplisting now, getting more attention, those types of numbers they put up, this is now when the stock is ready for its second leg up, I believe, in the capital markets.
Yeah, and tight share flow, as I said, 5.7 million. So very, very tight. And again, the daily volume is around 100,000. So moment of truth, get your green market out. I think we got our first green check mark here tonight.
Yeah, for sure. This would be an excellent business tone.
All right, let's now focus on our second company tonight, a company called Electrovaya. Vaya, I'm pronouncing that correctly, trades on the TSX and NASDAQ under the ticker symbol ELVA. They're based out of Toronto, Canada. Current share price, $2.49. Market cap, 84 million. Shares outstanding are 34.1 million. And daily trading averages around 72,000. This is a lithium company, Bill, which remains a popular resource for many governments based on emission initiatives for the coming years. So, what can you tell us about this company?
Yeah, so this is really interesting. Being a lithium-ion battery technology company, they're very different. They're not focused on the cars like Tesla. They're focused on the industrial use, the larger batteries. But they've been in business a long time. They've been at this for 25 years. They have more than 100 patents, and this is an established business. They have high-profile clients. They have more than 12 clients that are Fortune 100 companies.
Huge, huge.
And this I looked into it. This is an industry that there's a lot of growth. There's a trend toward electric buses,
Of course.
heavy machinery, and such. And so this I found was a lot more intriguing because of the barrier to entries compared to the car market that a lot of people are looking at if they're interested in this thesis.
So, 12 Fortune 100 companies they're working with right now.
Yeah, and they have, and to attract that business, they're doing something. They're doing reshoring. They're getting the manufacturing done in North America, which is attracting a lot of business from North American companies. So that was
Hmm.
an interesting strategy that they really put out in center, that's helping them increase their gross margins.
Something you don't see at a lot of lithium companies, I would think, in North America. A lot of offshore, do you not think?
Yeah, that is correct. This was something that they were pointing out is a real barrier to entry compared to the foreign companies, because they go to these Fortune 100 companies, and these
Yeah.
companies are interested in doing business locally. But this is a strong growth area. You know, the electric commercial vehicle market is supposed to have a CAGR of 23.8%. You can see a chart put up here. So this is has a lot of legs on it to grow the thesis and the area that they're in.
All right, let's go to the charts and check out their balance sheet. Or I should say, very important thing when it comes to a technology company is always looking at their current assets. What'd you find?
Yeah, so their current assets are $27 million. Their current liabilities is $27 million. It's about the same. So their liquidity or working capital is light.
Okay.
So this is something we got to consider a little bit more. They have debt on their balance sheet as well. So this is something now we got to consider when looking at the rest of the story. We know the thesis is strong. They've been established. They're doing well that way. But we see their liquidity and balance sheet has a bit of higher risk. So now we'll continue on the story to take a look to see if that's something that we can manage.
Okay, so you just outlined their working capital. What was revenue growth over the past year?
So over the 5 years, their CAGR is 51%. We see
Okay,
here in the chart.
impressive.
Uh, Gross margins are 30%, and they don't have to do a lot of marketing on the commercial side. Their SG&A is spending is only 15%. So when you're on the commercial side, there's less spending on building a brand than there is on the more retail side. And so they're cash flow positive though, for the most part. When it comes to EBITDA, their EBITDA in the last 12 months was $4 million, and they're
Okay.
just slightly behind on leverage free cash flow. So we see that after they spend their money on their R&D and their capex, they're in a tighter position. But you can see with that type of revenue growth and EBITDA being positive, this is kind of a turning point of the company that we just would have to watch closely as investors as they transition into that next growth stage.
Okay. Moment of truth. Would you own this stock?
I would, because I'm interested in this technology. I love the fact they're in the commercial side with a barrier to entry. They're de-risked than most tech companies because they already know what they're doing. They're already selling. There's people buying this. They have some liquidity. It's tight right now, risk there. But you know, this is their stock is already down this year by 50%. I think that's de-risking an entry point for it. So I would buy this because I like that. I want to be exposed to this technology.
Would only enhance, I would think, see how this election will do for this industry. But I think it'll be a favorable one if you look at some of the previous administration. But this is not a political show. We will see how things pan out. But green check mark then for our second company here tonight. All right, let's now move to our third company. It's one of our cannabis plays of the week. It's actually a cannabis tech company called Cannabix Technologies. They're based out of Vancouver, trades on the OTC under the ticker symbol BLOZF, and on the CSE under the ticker symbol BLO, otherwise known as BLO. So current share price 44 cents USD, market cap is 50 million, shares outstanding is 115 million, and daily trading averages around 100,000. Bill, I think a lot of people that follow this podcast, and we all know this, that you know the Canadian opportunity, it's been missed. There was a big opportunity in Canada, but many have now shifted to the American market. However, you found this story different. Why is that?
You know, it's interesting. I think there's a real need here. So one of their specialty businesses that they're proving out is cannabis breathalyzers. So right now for testing, people have to give some of the hair sample, urine, or blood. And what that
Yeah.
does is that tells you if you use cannabis sometime in the last few months. That doesn't answer the question of a police officer that wants to know if
No.
you use cannabis today. Or if you're going to work and you're using machinery, the company wants to know, are you using cannabis now? So there's an interesting technology they have here that can detect cannabis use in the last 1 to 4 hours. And so this really caught my attention. This is a pre-revenue company. This is a technology they're proving out. So we're going to look at this similar to how we looked at some of the biotech companies last week to see how are they positioned for this.
Do you have an idea as to how big the total addressable market in North America is when it comes to drug testing? Because I would assume, well, how big is it, first off? Do you know?
Drug testing is huge. So it's estimated to be about $6 billion last year.
6 billion.
It and it
Wow.
has a CAGR of 13.5%
So,
going forward expected. So drug testing is a big, big marketplace.
so how exactly would you differentiate this from an alcohol breathalyzer? Like, how exactly, do you have an idea as to how it works?
Yeah, so it's similar. So right now they partnered with a company called Omega Laboratories
Okay.
to be able to prove this theory out, and they've had some press releases that upon individuals blowing into the unit, it has detected THC, and also being able to give a level of this. And so they had a press release about last week that came out saying that they're having success with this alcohol type breathalyzer model for cannabis. And so to me, this seems like something that all police forces probably in North America
No kidding.
would want to have. And same with the employers. That's so silly. If you're working in a place like Canada with legalization or a state in the U.S. with legalization, employers have no interest in knowing if you had cannabis 2 months ago. They're concerned about your on the job performance if it's a risk of danger. So I could see this being a huge market.
Still a lot of companies, though, in legalized states that still have drug testing for their employees. So, signs of the times that things need to change. But we all know, let's face it, whatever technology does emerge for this industry, what an opportunity it'll be, because the current cannabis drug testing market right now is a very confusing one, and it's very, very complicated. To your point, like, what are you going to do when you're basically taking a hair sample from somebody doing, cannabis, say 1 or 2 months ago? Like, that's obviously not going to work. So let's go to the charts. Current assets are 3.8 million, working capital 3.7 million. Platform is still in the development, therefore no revenue from last year, very similar to a biotech company. But what was their research and development spending from last year that
Yeah,
you
so
found?
let's bring this chart up, and this is where I got really impressed. I'm always worried about these companies having huge spend while something's under development. So
Okay.
we didn't mention. You mentioned they have working capital of about 3.7 million. Their leverage free cash flow last year was negative 1.3, but
Okay.
a million of that went into R&D.
Okay.
So they had
Huge.
300,000 left to run the business, and they have to pay for stuff like their listing on the stock exchange, an audit, some legal fees. That tells me no one's taking some big salary or anything out of this business. They're putting it back into R&D. So this tells me that they have about 3 years of burn to make something happen. But it's pretty close to being a debt-free. Well, it's a debt-free company, but there's just a little bit of liabilities, but only about 2% compared to their assets. So with this, they could maybe raise a little bit of debt to extend the 3 years or just get stuff done. And when I look at the news releases coming out, they're having success proving out this process, but it's not a huge regulated area like drugs with biotechs. So this is something that they could get to market a lot quicker than a drug company. So this I thought was quite interesting.
Hmm. Well said, because yeah, you're right. When you look at it that way. Okay, moment of truth. Would you own the stock?
Yeah, this is what I call a YOLO pick. So instead of buying call
Yeah.
options on Nvidia or something, this is something that I would buy, but I would know it's higher risk, it's a higher return. But I like it because it's lean tech. I don't see a lot of spending frivolously. They look like they got about a 3 year burn, and I believe there's a big need in this technology. So it'd be something that I'd be interested in owning.
There's a massive need for this technology for the industry. And as you said, it's not really dependent on a lot of legislation stuff in the US pertaining to Washington. Regardless of what happens through there, the industry grows. And as you see more and more industries basically pass, or states, I should say, pass adult use cannabis, there's just more and more needs for stuff like this. Let's now move to the fourth company, which I looked at this, and this seems to be a jack of all trades. At one time, this company was an outdoor advertising company, an in-flight internet company, and now it's a crypto miner. And judging by the pace that they're on, this could be an AI company in the next 12 months. But it's a company trades on the tickers, or I should say, trades on the NASDAQ under the ticker symbol ANTE. It's called Airnet Technologies. What is going on here? Because it sounds like nobody really knows what they're doing.
Okay, well, first of all, I wanted to find out what was going here, so I went on and went on their website. Doesn't exist. I went to check out the analyst calls. There hasn't been one since 2015. Last earnings report press release was December 2023. There's news releases that they've changed the board, changed management, letter deficiencies from the NASDAQ, no contacts on press releases, no investor presentation, but they're still listed on the NASDAQ.
How
And
do
so
they
just,
maintain a listing? How do you
well,
maintain a listing?
there's a gentleman that's connected to the company that put some money in a private placement from one of the Caribbean islands. So they're just meeting the Nasdaq listings, but this is something a lot of times people say well, a company's on the over-the-counter market in the U.S. That's risky. I'd rather it be on the big board. I don't know. Look at the company. Don't be too worried about the exchange. Is a good lesson that we can learn from a company like this. But we should pull up the stock chart, look at the history a bit.
Let me see this. This should
Yeah.
be interesting. Wow. Okay.
So,
So go
crazy,
ahead.
almost $500 one time.
500, 480 USD back in Jan. Now it's pretty much a penny stock. So what
Yeah.
happened?
Yeah, I can tell you about this story. I was I was involved in it. 15 years ago, anything that had to do to China, even if it was a corn farming company,
Yeah.
everyone was so excited. It was a bubble. And so the theory was that in the 1900s or the 1800s, you wanted to be in the UK. The 1900s was the US, and China was the 2000s. If you're not getting into
Dawning of a
China
new
early,
millennial. Yep.
yeah, this was the way to be. And so there was a lot of these companies. The Nasdaq was recruiting companies to come out to list from China, and so I was getting hired all the time to give valuation opinions in China. I'd fly over for 2 days. I'd be looking at a biotech, a corn company, giving a valuation opinion so they could get a listing over on the Nasdaq. But what happened was people were so excited about China they weren't looking at the details. So a lot of these companies, they had audits, but we found out that even though these audit companies were subsidiaries of North American established audit companies, and they weren't doing very good jobs. And so in the end, we found out that you couldn't trust
Clearly.
the audits. It just became a hazard. Now the Nasdaq's tightened up, but at the time, the Nasdaq was super excited in the hype. And so this is a cautionary tale for anything that when it's super hyper and people say there's nothing can go wrong, that's the time to be very, very careful.
Do we know what year? I'm trying to think of when the NASDAQ launched. Do we know? Is that
It's
is it
ba-
late 90s? Is it late 90s?
I guess in its current form. Before that, it was more more an over the counter the market originally, with the history of Bernie Madoff.
Like
But
classified, as you said, as like the official like tech exchange. But you're right. I remember that era. Anything out of China, it was kind of like the dawning of a new century, new millennium, should say. And yeah, everybody's focus was on China for a long period of time. Not to sit here and say that they've steered away from China, but it's not viewed the same as it was 15 years ago. Okay, moment of truth. I think we're going to get out our red marker. This is our first X here tonight, knowing that we have no idea. This is not on sale. This is a trap.
yeah, this is a warning to everyone and an educational lesson.
Okay. All right. So recapping so far, first company, AXIL Brands, New York Stock Exchange, ticker symbol AXIL. You would own that stock, along with Electrovaya Incorporated, NASDAQ, ELVA ticker symbol. You would own that stock. And as well, Cannabix Tech on the OTC under the ticker symbol BLOZF. You would own that stock as well. Airnet Technology, as I just said, on the NASDAQ under the ticker symbol ANTE is a stock that you would not own. All right. It is now time for our multi-state operator cannabis pick of the week. And this week we're highlighting Jushi, which is very well known amongst our community here. It trades on the OTQX under the ticker symbol JUSHF. And you actually began initiating coverage on the company this week. But just a few highlights. Company, it operates in some strong Midwest growth states that include Pennsylvania, Virginia, Ohio, Illinois, and Massachusetts, along with out west in Nevada and California. But a lot of that growth opportunity are in those Midwest states. Company was actually originally put together by some hedge fund managers out of New York. They went public 5 years ago, and what was on at one time named the Neo Exchange, now Cboe Canada. They've quickly grown. They reported $270 million in revenue in 2023. So when you start diving in and initiating coverage, what stood out to you most?
Yeah, so first we're going to take a look at the revenue growth. We'll see this here on a chart here. We can see over the last 3 years, they had this amazing CAGR of almost 50%, outpacing the
Yeah,
industry and their peers. It slowed back this year, though, and that's one thing we're going to be
that's
watching a
okay.
little bit closely. That's okay. It's slowed back. We would like that to return, but over a 3-year period, their revenue growth has been amazing.
Yeah, and I will say that everybody knows with the current share prices at historic lows, this is not a fundamental play right now. This industry, it's a political play. But like we said, if we get some sort of movement in Washington, there's near-term growth catalysts for a lot of companies in this space, including Jushi. Okay, next question. You brought up current revenue growth. What'd you find as far as gross margin along with SG&A?
This is where we bring out the celebration for Juicy's management. They just smashed it out of the park this year for cost
Yeah,
control.
yeah.
They improved their gross margin by 8.4%, the raw number, to bring it up right to a little bit higher than the average in the industry. But same with their SG&A, they dropped it by 13%, the raw number. And so this is an amazing situation of how they really sharpened the pencil when it came to cost and efficiency in their business in the last year. So hats off to Juicy's management for that area.
All right. What's their current status of liquidity?
Liquidity is tighter than the other companies. And so this is something to be aware of. Normally, I looked at different things like debt renewals. I factor that into as well. What it came out to is just they run a little bit more risky on the side of their liquidity than their peers.
Okay. And what's their leverage showing?
Yeah, same thing. So they have a more leveraged balance sheet than their peers. And so this would be Juicy with using the leverage that presents a higher revenue growth potential, higher return opportunity, and higher risk as well. So that's not a right or wrong, but that's something for investors to be aware of when they're looking for the type of cannabis company that they are looking for.
All right. Next up, levered free cash flow, which again,
Well,
according to you, is an important one.
here it goes. So you cut those expenses like they did,
Yep.
that flows down to real cash. And so in the last 12 months, they improved their leverage free cash flow by 18.8%, the raw number, not just the percentage. And so that got them to a margin of almost flat. So it was minus 0.2% negative cash flow. They're just at the point now of turning into real free cash flow. And that's because of all the cost cutting efforts that they did successfully in the last 12 months.
All right. Second last question. What is their current CapEx
Yeah,
outline?
yeah, they're a little bit lower than the industry, and I think that's they had a conservative year last year. They were conserving cash, but if you look at their strategic plan that they outline on their website and their analyst calls,
Yeah.
capex is going to return because they're going to have to start investing like they're planning to in their strategic plan.
Yeah, one thing to point out too is that one of those Midwest states is Virginia, and their governor Youngkin obviously voted against approving adult use cannabis. However, he is not up for re-election at the end of this year, so that should pave some opportunities to see how that kind of unfolds. Because really, there's not a lot of competition within that state right now. Them, the cannabis, and I only think there's one other, but grew very strong growth state for this company. Not to mention to add on to their 270 million they just reported in revenue for 2023. Okay, so as we've said, this industry has been beat up, but short-term catalyst announcements out of Washington could be happening in the next 3-4 months. So, is this a stock that you would own?
Yeah, so I put a hold rating on it, which means that if you held the stock to hang on to it is what I would do. But I would wait to add any position until I started to see the revenue trend start turning up again. And I'm confident that's likely going to happen pretty quickly here. They have their earnings coming up in a few weeks, and if I saw that their revenue in the last 12 months was returning to be positive, then I would switch it to a buy position, meaning that I'd be adding more if I was already owning it.
All right. And if you want to learn more about the research report as we initiate a coverage in Jushi Holdings, check out our QR code here at the lower right-hand corner of the template and subscribe to our baked-in newsletter. It's also linked within the description of this YouTube channel. And you can log on to thedalesreport.com not only to get research coverage on Jushi, but other companies recently included Cureleaf, Glasshouse, MaryMed, Terracin. What else do we have? TrueLeaf. But yeah, some real notable names. So if you want to learn more about some of the research that we've done pertaining to the space, I know you've been extremely busy over the last 6 weeks highlighting a lot of these companies. And don't look now, but we're 3 weeks away until earnings season begins. Kicks off August 5th with the darling of the space, which is Green Thumb Industries. So all important stuff. And I know you've done research on them as well. So again, check out QR code right here at the lower right-hand corner of the template. And subscribe to our baked in newsletter. We appreciate it. In the meantime, enjoy that Mexican weather. When are you back up home, or are you staying there for an
Yeah,
extended
I'm going to
period
be
of
down
time?
for most of the summer, but I'm coming back on July 31st for a couple of days. Got to cut the lawn and do some
Right
stuff
back.
around the house before I go back.
More vineyards to attend, right?
Yeah, exactly. Yeah, more beaches.
All right, great work. Smash that like button, leave some comments below, and give some love for Mr. McNarland as he looked at another 100 companies this week and highlighted 5. So he's doing a lot of the work for us. So let us know your feedback. Do you like the stuff that we're covering? Do you like the companies? Is there any companies that we need to cover that you want to basically have us cover? I'll say cover one more time, but yes, let us know and we'll get back to you right away and we'll have a look at some of these companies. Bill, enjoy the rest of your weekend and we'll see you back early next week. Okay.
Thanks so much. Take care.
Take care. Hey everyone, thanks again for watching. Hey, we're humming along and it's all because of you and the audience and community that we're building. So again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel because in the end, we wouldn't be here without you. Thanks again, everyone.